Good afternoon. This is Clark Neighbors with BIS Commodities in Cedar Rapids, Iowa, with the summary for the week ending February 28, 2014. Any of you that have seen the movie Groundhog's Day with Bill Murray may find this kind of apropos this week, or this month, I should say, for the month of February, with a pretty solid market. It seemed like every day, though, you'd come to work and the temperature would be below zero, but at the same time soybeans would be higher. I think soybeans were higher all but 3 trading days this entire month, so very positive day, week, month, mainly led by the soybeans. But at the same point, this week was kind of an historic week in some regards, or historic month, depending on how you want to look at it. We made all-time highs in the oats this week, over $5. The cattle market made new all-time highs, with the cash trading $150, and the hogs also making all-time highs. And we will talk a little more about that in a second. So from that standpoint, kind of a strange February. Typically February as a month is fairly quiet in the commodity trade, but when you look at where things traded for this month, corn up 23 cents, beans up $1.32 on the old crop. New crop corn 21 cents higher. New crop beans up 65 cents. Wheat about 40 cents higher. Cattle were $14 higher on the month. Hogs $11 higher in the month. Crude up $6. And quietly, the stock market closed at all-time highs again today, up on the S&P about 74 points this month. So the point being is, it looks like, it feels like, it smells like we're seeing some outside money, not only in the stock market, but coming into the commodity trade to some degree. Maybe not to the volume or the aggressiveness we've seen several years ago, like in 2008, but no doubt we're seeing some, looks like some money flow, investment money by the outside trade. And looking at Commitment to Traders report, I think that's been signaled here over the last few weeks. Some fundamental reasons flow on these grain markets. Again, the soybean trade has been the market most everybody has followed, and for the entire month of February, because of the huge crop anticipation coming out of South America. Now, keep in mind, some of the expectations have been shaved back, but we are in the midst of the biggest soybean harvest in the history of mankind right now, with the crop coming out of South America. But having said that, we have a huge book on for soybeans here in the U.S. this year, mainly led by the Chinese, buying somewhere in the range of 60+% of the entire soybean exports this year. Because of transportation problems, because of contract structures, the Chinese up to this point have basically canceled little or if any soybeans up to this point. Now, going into the month of February, that was the thought process. It wasn't a matter of if, but when we would see, and how much we would see cancellations by the Chinese as they make that transition from North American soybeans to South American soybeans. So thus far, we have not seen that. So every day you come in and there's not a cancellation. The market has somewhat of a green light there at 8:30. It seems to buy. Now, there was a day earlier this week where we saw a new sale of beans, of old crop beans, to China, which was later changed to an unknown. But I think that caused a lot of questioning in the market on the situation, based on the fact that beans out of Brazil from now through June are 80 cents to $1 cheaper than beans out of the U.S. So with all that being said, the market has reacted fairly positive, since we have not seen at this point those cancellations. Now, keep in mind the amount of beans the USDA has anticipated for exports this year is about 90 to 100 million bushels light of what actually has been sold. Brings on the question of what is the real bean carryout. So on the 10th of March, here in about a week and a half, we'll get an update on that information. Now keep in mind, we may be seeing some transition from moving some old crop sales to new crop. Some talk on the bear spreads buying November, selling July by one of the commercials late this week, but nothing really concrete on that at this point. So again, keep in mind, watch for cancellations. The market seems to be led right now by the soybean complex, and that will be interesting to watch as we go in the month of March. Transportation, logistics, talked about this time and time again, is probably as bad as we've seen in many years, not only because of the weather that we talked about earlier with Groundhog's Day, but also because of the huge increase in demand for energy-related movement, especially in the grain complex, or excuse me, in the energy complex. That has changed the dynamics of movement of grain and many other products around the U.S. Transportation may slowly get a little better. We're still looking at some cold weather here for another week. The river system is in a backlog. The rail system is at a huge backlog. There's talk that we can't get enough oats out of Canada to run some of the processors here in the U.S. So there's many things in the transportation sector that need to be watched and are going to be very influential in this market. Speaking of transportation, ethanol margins are very good in lieu of lack of demand for unleaded gas this winter because of the poor weather, especially in the eastern half of the U.S. But margins are very good. Part of that, again, is due to the fact that some plants have had to slow down, shut down, because they could not get tanker cars or rail equipment to move the product out of the plant, thus having to shut the plant down. So a lot of interesting dynamics going on with transportation that's having not only effect on the board price, but maybe more specifically on some of the spreads and also on basis as we go through. The key going forward is movement. Do we see a good shot of movement as we close in on planting time sometime in the next 60 days, believe it or not? So continue to watch that. As I mentioned, lastly, the livestock trade, cattle and hogs both making all-time highs. Cash cattle traded above $152 this week. Keep in mind, it wasn't too many years ago where you didn't see cash trade over $100. I mean, in the last few years. The box trades well over $200, pushing that 225 area actually. The supply situation in the cattle and thus the hogs is the key driver in those markets right now. The hogs more because of the disease of the PEDs and what the anticipation of numbers are going to be down the road. Now, keep in mind, the hogs cold storage report that came out late last week showed a record amount of pork in cold storage. So the weights are higher, the actual tonnage of meat's pretty good right now. There's still anticipation of what PEDs has done to the number of hogs or feeder weaner pigs and feeder pigs as we get into spring and summer will be key. In summary, three things to watch as we go into the month of March. One, obviously, is weather, not only from a standpoint of transportation and trying to get rid of the last bit of this winter weather, but also as we approach planting time. And keep in mind, at the end of March 31st, there will be a planting estimate by the USDA, farmer survey, also a grain stocks report. So that'll be the next key game-changing type report potentially. We do have a supply and demand update on March the 10th. That can only be a situation where you see demand change. Obviously, the market's going to watch soybean export numbers to see if we see changes there. Demand has been a shift. That's the second thing to watch. If we continue to see that, I just mentioned the soybeans, but also corn. I mean, quietly, the corn exports have went from somewhere of around 1.2 billion bushel in the early estimates going into harvest up to around 1.6 billion bushel. It's not a huge export year, but it's a dramatic increase over 1.2. I think that's had some impact on basis. It's made the river more prevalent, and it's also had a slight narrowing of the spreads as we go along. And lastly, just the outside money flow. The third thing to watch as we go into March. will we continue to see money come into this commodity trade? None of us know the answer to that, but keep in mind, if February, when you look at returns on some of these commodities, have been pretty impressive. So until we see things turn around to the negative, that money flow will stay to see what kind of returns they can transpire going forward. If any of you have any questions, feel free to call us at BIS Commodities. Phone number is 800-373-2525. Check us out on the web at biscommodities.com, and also on Twitter with BIS_commodities. With that, have a great weekend, and one of us will catch you next week.